Well, I want to talk about long-term care. This is a challenging issue. Mm-hmm. It's not a ton of fun to talk about. Nope. However, I think it's very, very important. It's our belief that there's a financial plan or an estate plan is not complete without a plan to pay for long-term care if that comes up. And I love the way our friend Steve says it. He says long-term care is the great white shark of retirement. We're focused on a lot of other issues, right? There's a lot of conversation about not running out of money. There's a lot of conversation about taxes, but we very rarely see, some folks might have a financial plan, they might have a tax plan. Rarely, if ever, do they have a plan to pay for long-term care. And it's kind of a hope and wait, strategy, and that's dangerous.
Well, it's just shocking because today in Northwest Arkansas, nursing homes are anywhere between $8,500 and $10,000 per month.
Mm-hmm. If not more. There
aren't too many estates that can handle that for any length of time. Mm-hmm. And so you have to plan ahead for this. And so please understand that if you do no planning and you come to see me in a crisis, someone's going into the nursing home, if you're married, I can protect pretty much everything, $1 million up to $1.5 million, not counting your home, all right?
Now that's for the first spouse.
That's the first spouse. When that second spouse needs to go in, or when a single person goes in, it gets much uglier. I can protect at least 50%, sometimes 60, 70%. People come in thinking they can protect nothing, but 50%, 60 is good.
Yeah, it's a lot better than nothing. Mm-hmm.
But if you will pre-plan, those numbers go up tremendously. Mm-hmm. So for each of those, we can protect almost 100% of your stuff if you have a plan to pay for long-term care when it comes up. And a big problem is when you think you're about to need it, it's too late to plan.
Yeah.
No insurance company is going to give you a policy if you've been diagnosed with dementia or you're on your way to the nursing home. We have to do a crisis plan. Pre-planning is crucial.
It's always better, and in a lot of cases, you can actually set up your estate to be in a better spot too, even if you don't need the care. And so I think that's what is so important, is figuring out, okay, most of the time when we hear folks that they say their advisor has talked to them about long-term care, typically the conversation goes like this. They go, you have enough money, you're going to self-insure, don't worry about it. I just want to take a moment and translate that.
Man, that's $120,000 a year today. It's just going to go up.
It's only $600,000 or $700,000. Like, don't worry about it. It's not a big enough deal for us to spend any time on it. So, you'll pay it when it comes.
It's just shocking.
That's fascinating to me. And so when I hear that, I go, this is a missed opportunity. That $600,000, $700,000, $800,000 or more, depending on how long you're in the facility, and if both spouses have to go in. If you had a plan to pay for that or could protect, the balance of your assets, how could you spend that money better?
Yeah.
How could you spend that money better in retirement before you went into the nursing home? I think that's one of the biggest tragedies to me, really, is that folks, they really save well, they invest well, and they're waiting for a rainy day to come. And that's great. I really appreciate that we want to be proactive about that. But this particular expense, if you're just saving a bunch of money for later on that you don't have to, that you could have spent on, time with the grandkids, traveling, doing stuff that's important to you, how many missed memories, how many missed opportunities do we have? It's kind of hard to quantify.
Yeah, if you're planning to pay for this by yourself, you're going to scrimp and save and not do things because of that. But there are some very nice plans out there that you're going to get your money back one way or the other. Mm-hmm. Either it's going to pay for long-term care or it'll come back and go to your heirs. And that's just the perfect plan. You can rest better at night knowing this is taken care of. I don't have to worry about it. And I'll be able to work with your family and protect probably close to 100% of everything if you have something in plan to pay for that.
So we go from an unknown risk, could be, and the statistics that we see frequently are, if a husband and a wife make it to 65, statistically, 3 out of 4 of them, there's a 75% chance that they're going to be, one of them is going to go into the nursing home. Yeah. 25% chance that both of them will go into the nursing home. And so if there's a 75% chance that your house is going to catch fire, probably a good idea to have a plan to handle that.
75% chance you're going to have a car wreck, you probably want car insurance.
Yeah.
But there's
you might drive a little differently,
But having a 75% chance that you're going to go into the nursing home, people are like, let's just don't worry about it.
Well, or they say, I don't want to go into the nursing home. Well, the nursing home, as you say, Todd, the nursing home is filled with people who never wanted to go into the nursing home, and so this is why it's sort of hard to deal with. But, if we earmark that money, if you're in the situation where your advisor has said, or, you just know that you're going to have to self-insure, if we know that's going to happen, what if we carved out a portion of that to protect the rest of it?
Yeah.
You're moving money from one pocket to the other pocket. But now you can spend freely those other dollars, and you don't have to worry about that. And you know that if that event happens, you'll be in a better position. Yeah. And if it doesn't, hopefully it doesn't, that money will go to your beneficiaries in an increased way.
We're able to turn an unknown into a known. We know it's taken care of, and you're going to get that back one way or the other. It just makes total sense.
And I think folks really, they feel better about spending in retirement when they know that that's covered.
Sure.
We've got the income plan, we've got the tax plan, we've taken care of long-term care. The folks that we work with, it takes sometimes 6, 8, 12 months to get everything the way we really need it to be. But they seem to enjoy life a lot more in retirement a lot more.
Yeah.
And so that's what we want to get to.
Well, and it's just cool. We can do this in our office. Between you and I, we can solve this problem super quick.
Well, yeah, and I think that's something that is very unique about our approach. I mean, we can do all the financial planning, all of the investments, all of the insurance, the tax, and the estate planning under one roof. And we have independent professionals that work together. I think that's an important point. We don't have yes people that are just doing whatever we tell them to do. We bring in specialists who are also experts in their field to help address those specific issues. But the challenge that most folks have, they might have varying professionals in those different fields, but they don't communicate with each other.
Right.
They don't talk to each other. And frankly, sometimes it's hard enough to understand what I'm saying, let alone try to translate that to the attorney who doesn't know how to do it,
right,
to the CPA who doesn't understand that stuff,
yeah,
and try to get them all in the same room together.
It's impossible.
Yeah, and even if they want to, just coordinating schedules is hard enough.
Yeah. So I encourage my estate planning clients, those who just call the office thinking, okay, I just need a POA, I just need a trust. I encourage them to let you in the meeting with us, because we have some fun meetings, okay? And we check each other. I may be going down this road and I say, okay, I think, this would be good, this would be good. And you're like, hang on, Todd, what about this? I'm like, oh yeah, I didn't think about that. And sometimes you'll start talking. I'm like, hey, Ian, what about this? And then sometimes we're like kind of adamant that, and it's just fun. Okay, we don't fight, but we do have some very heated discussions, but it's all in the client's best interest. We are looking after their situation, and you're getting two professionals with very different silos, can we say, but to bring those together, we provide such a total plan for our clients that I know, and they know it's all taken care of. And so I encourage y'all, experience us in a meeting together. It's fun most of the time.
It's kind of like when you go to one of those restaurants, it's a small restaurant and the kitchen is half the restaurant.
Oh yeah.
And you can sit there and you can watch them prepare it, It's kind of like that.
Yeah.
It's never a dull moment in there, because every situation is different. There's no cookie cutter with anything
Absolutely.
that we do.
Right.
Every single situation is different. What you have, how you want it to go, how you want to spend it, it's all different. And so we have to, we're kind of the scratch-made kitchen of financial and estate planning, but we do a lot of it in front of you so that you can understand and see how we think. And I think that's a lot of fun.
I love the process. I think it's good for us, and it's particularly good for the clients.
Yeah, I think so too. And we do it because we love it, frankly. We see some of these things as challenges or obstacles that we can help our clients solve, and those are always really satisfying. To someone walks in and goes, I don't think that you can help with this. And then,
Trust.
45 minutes later, we figured it out, and it's stuff that you've never heard of or you never knew that we could do. And that feeling of being able to help folks accomplish their goals in a simple way without having to run around town and spend 2 years trying to do it, it's really a lot of fun.
Yep.